Greek bailout on the rocks again as we now start to hear some fresh rumblings out of Portugal. Defiant Iran touts its nuke work, and Apple helps fuel a major reversal in the stock market. Will the short-term trend of this market change? I'm Scott Redler, and the morning call starts right now. Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com. Welcome to today's morning call. So finally, yesterday, the bears did a little bit of work. They had a distribution day, the second distribution day within the last, I think, 4 or 5. You didn't see extreme selling, but there were a few little composure changes. You know, a lot of people were upset that Greece is not resolved yet. You're starting to hear some rumblings out of like a Portugal where potentially there could be some problems there. You had Iran still just, saber rattling, saying that they have nuclear capabilities, which puts a little fear out there. And then, we've gone a long way. So the question is now, will this short-term uptrend or this accelerated uptrend stay intact, or do we finally break it, get some corrective type healthy action to a more intermediate trend or longer-term macro trend for the dip to buy for resumption later this year? At this particular point, if you look at the chart of the S&P, you will see we're still fine. We have all these trends in place, which I'm trying to teach you guys. This is the long-term trend from the outside day back in October. Here's your higher low. You have another higher low. And then this macro trend still hasn't even been close to being tested. That's 1257. If you look here on this day, it looks like a big green bar. Those big green bars mean a lot to technicians because this is when the rally started to ignite once again. And we've had this accelerated uptrend that we've been following. We haven't been able to really close below this 10-day moving average this entire time. And I've mentioned to you guys how typically in strong bull moves, the strongest stocks follow their 10-day, the 20-day, usually high beta names, not the indices themselves. So the bulls are getting a little bit spoiled. So if we happen to, break the 10-day, which we started to do yesterday, there's nothing wrong with testing the 21-day or sometimes even the 50-day and then resuming, giving people a chance to get back in and for new energy to come to the market. So if you look here on the chart, the question is, can traders add to their shorts if they went out short on yesterday's, negative close? Here is that line in the sand. Here is that 1333 to 1337. If we were to close below this today on a daily basis, not intraday, because intraday we tried a few times. If you remember right here, they pushed us below and came back above. They tried to break this floor. They pushed below, we came back above. So if we actually get a daily close below this floor, you could at least see a move to the 20-day or 21-day, which is so close right there. And then ultimately, we could test this level, which is around 1300, and we're still not even at the 50-day. We're still not even at the macro trend. So yesterday to me was a day to take notice for the short-term momentum type of trader. And it was even more extreme in the Qs. The Qs have been a leadership position. Technology has been on fire. And if you look here at the Qs yesterday, you had a huge outside day, even more of a red flag than the spiders right here. But they also went a lot more. So if you look here at the Qs, you will see, look at this accelerated uptrend. We've talked about it many times. It shouldn't be news to you. This is the more gradual macro uptrend, which it hasn't even come close to in so long. Also extended from all these major moving averages. But yesterday, you had an outside day. Outside days are days you have to write down. Outside days are days where we push through and fail, and that's when I clean up long positions because that could be a momentum switch. Now, when I talk about a day to take notice, what that means is you clean up positions, you get on your toes because that could be a momentum shift. It's not always one, but if you recognize it, you get to save yourself some pain if it is. So if you go back to the chart and you see if we break below this little floor here, if the Qs get below, just say this 6260, there is no reason why it cannot go down and at least fill this gap, get to the 21-day, and right there, that's a small little decline. But traders can make a lot of money there. If you're a macro investor and you sold into the strength and you're in tier 1 now, maybe you get to tier 2 here. Or I've seen crazier things where sometimes they come back and retest old resistance that becomes support. And if you look here on the Qs longer term, this was that level that it broke above earlier in the year. So there's some clues that it could come back and retest this. But right now it's only up here. Everyone's getting all, bearish and this and that. For me, I'm a short-term guy. I could be short this, but believe me, I'm going to be testing dips if we get there, so watch this for today. Now, in the sector spotlight, I'm going to talk about some key stocks that looked like they could have broken out, but they failed. Another clue that this market might be a little prone to a pullback or a retracement. One of them being Apple. Apple, you guys know I trade every single day, and to me, it was even getting a little hard to handle. Okay, I talked on Monday how they could push it early in the week, probably to 520-ish, and I know it went to 526. Get all the people to be buying the 510s, the 520s, the 530 calls, so then the option guys could just juice out the premium, and then at some point, that's when they pull the rug, so then they get to keep all the premium. That's part of the Wall Street game, which I try and teach you so you don't get sucked in. So midday, Apple had a huge reversal, and so did the market. If you look here at Apple, you now have a very big topping tail. Back, about a month ago, this was your buyable strategy. Here was your earnings. It held. This is when I started to get long. And then this is when it started to break higher. I think I was done with the majority of my stock here and missed the parabolic type move. I traded in and out, but nothing so great. But then yesterday, you had a huge outside day. Went to 526, broke lower, closed below the previous high. Some guys are probably short this thing, at this 509, and they're in the money. For today, for traders, I would watch this low. This was what, 496. So, it's opening below. If it can't get back above it, there's no reason why we can't see a test of this moving average right around this 486, and that's probably where I would look to nibble, for a bigger trade than just a cute cash flow one. And then you have another gap that comes down to here. So if you look real quickly, I just want to put, the volume in here just to show you how extreme it was. Look at the volume here on that trade. Wow. That, to me, is a sign for every technician out there that we're going to have a rest. Who knows? It could take a few weeks. It could take a few months. But at this particular point, the momentum and the juice just say is loose. Okay, as far as other stocks that had a push-through failure that I've been holding that I sold yesterday, Lulu, another leader, different sector, gave you some signs that we might be tired. If you look here on Lulu, you will see that not so extreme, but it pushed through a momentum level right here. See that little tail over there? And traded back below. Okay, I'm going to get rid of this volume here because it's skewing some of my charts. So this way, if I have to put it back later, I will. But if you look here, that's a day to take notice. And now I would say if it were to break this little level here, you could get some corrective action, maybe even down to here. So why stick around? As a macro investor, you're probably fine. Another stock that we've talked so positively about over the course of the past few years even is Visa. Acting well for the macro investor, but for a short-term trade, a little bit of a sell signal. If you look here at Visa, you will see that it had a massive move. Okay, look at this trend line, which is far above. It's extended from all the moving averages. And yesterday, it tried to break above this pivot and then closed on its low. A small shooting star, that means you can get some corrective action. So I'm out of the way there. As far as Nike, very similar, type of thing. Nice trend for the macro investor. You can stay the course, but for a short-term trader, a bit of a topping tail. And lastly, you have Toll Brothers, which has had a very nice run. It still looks good, but again, when you have trends like this that have been going for so long, and even this accelerated one, if you want to take some profits, if we just say we're to break below this 23, there's no reason why. The housing stocks, I can't believe how strong these are. You can't hit here, or maybe even a little bit lower. So the moral of the story here is know what type of investor you are. If you're a macro investor, stay the course. If you were in tier 2 or tier 3 yesterday, that was a day to get down to tier 1 so you could stay the course but get ready to buy like a pro. Active professional traders like myself, I cleaned up a lot of my positions. I went home a bit net short. I'm going to figure out in the first 30 to 60 minutes on whether or not that 1333 to 1337 will hold or we could press there. We're going to take a commercial break and I'll go into some more in depth after that.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
I'm going to go back in the trenches with a few of the indices and just overlay the Fibonacci retracements. So grab a pen, okay? Grab a pen right now and write down where some of these retracement levels come into play so you're prepared for if they get there, you could buy that dip if we break this upper level. So first thing I want to revisit again is the Qs. Qs have had a really big move ever since this accelerated uptrend started. So what I like to do is I take my little trusty function here to do the Fibonacci retracement. So you go to where it started to where it might have ended yesterday. So you go like that, you put them in, you take it to the side. So right away, the 25% retracement level, okay, from where this rally ignited above this little pivot, went to, it's actually almost right there, 62.18. 62.18 would be another 50 cents lower. That's a 25% retracement level. Okay, if we hold here and then we just continue to go sideways and resume, that's an extremely strong market. We saw that a few times last year. Then you have the 38.2% retracement, which I think would be unbelievable to get to. I think then shorts will make some money. I think long could buy back. So this would be support 1, support 2. This spot on the Qs, write this down. This is about 61.20. So there is some room to the downside. And then typically you never want to see it go below the 50% because that negates some of the power. And that would bring you down to the 60.33. So here's support 1, support 2, support 3. So next vehicle I'll use is, I'll say, the spiders. Because a lot of people trade the spiders, some people trade futures contracts, but the spiders, I think, I could show you, and you can have a good vehicle here as well. Go from where we ignited here on using these Fibonacci retracement numbers. You go right here. We ignited on this day, so this is the low to the high of yesterday, right there. So if you take a look at it here, okay, the 25% retracement for the spiders, okay, is right around 122.47, which is also pretty close to the 21-day. So here you go, 132.47. If we break below this upper floor, that could happen pretty quick. That would probably be a spot where I would take off the majority of all my shorts if that's the way it goes, and then look to be a dip buyer. And then that 38.2% retracement, which also aligns with this recent floor way back, not even that far ago, in January, that comes in around 130.68. which also is around 1,300 in the SPX. So here's your support 1. If we break this upper floor, here's your support 2 in the spiders. Make sure you write that down. Now, as far as some of the weaker sectors, the two groups that I think that have, that started to break down a little bit before was the financials, which, we had a really big move there, so you can't be upset about that. Things do pull in. If you go to the XLF, you will see that, here, we came into some big resistance, which I wanted to show you at the morning call, but I didn't, and we somewhat failed, okay, coming into like right around this 15. So this is your point of reference moving forward. Okay, now if we go a little bit closer here on the XLF, you will see that, ever since this rally ignited, okay, right around here also, so I'm going to be consistent, use the same spot. We go to the top here, using my little trusty, I feel like I have a utility belt like a superhero, but I'm far from it. Anyway, here is your 25% retracement at 1430. Here's your 38.2, which is right there, 1398. Write that down. This was also a previous stair step floor. And then you have the 50% right down here, which is the other stair step. So you always want to have these levels in front of you. And they're always hard to respect when the action's taking place, because if we do go down to just say the 38.2 or the 50% retracement, people then get a lot more worried because you're in the moment. If you have the plan and you realize why you had it beforehand and then wait for the market to confirm it, you're ahead of the game. So at this particular point, again, the upper trend has not been broken. If it does, you want to have a plan mapped out and laid out in front of you so you can get back involved with the plan, with the tier system, so you can be profitable and ready to go. So as far as some quick hits, I'm going to get into that section right now. I see a tight pattern in Google. I want you guys to check it out. Google had a nice move since earnings, but now I'm not sure which way it really wants to go here. You had it break above this earnings gap. It was somewhat of a powerful, quick, nice trade. It also was a nice accumulate for the macro investor versus the 200-day, but now you have a little bit of an inside channel here. So if it were to break below the 604, I think you can get a cute short to retest, where it broke above around 585. If it just stays sideways, then where the resistance is around 517 there with Google. The next stock that I want to go to for a quick hit is Amazon. If you take a quick look here, it was downgraded. Yesterday I started talking about Amazon, that it was a bit weak, and you had a macro pattern that was also not looking so good. From the high, a lower high, a lower high. You did have, from this 170, You had a nice 3-day gap fill, which was the same thing that happened here, okay, which it started to negate. Okay, so I was going to look today to see if it can break below this for a short, but it's already below it because of the Morgan Stanley downgrade. For you macro investors in Amazon, I've talked about the high multiple. I've talked about how they've missed earnings, how they've had a few passes. But technically, if this were to break this 170, I'm telling you, get out of the way because there's no reason why it can't get down to that 125 or so. As far as yesterday, there was some strength in Juniper. So it tried to break above that lower level. I think you could watch yesterday's low just to give you a quick look at the chart. I think it's okay, but with market pressure, I don't think it's so compelling. But this on a down open like today, what you want to do is the stock broke this little pivot here, came off the highs. You want to look to a strong stock. I would say it's got to hold half of it in order to really stay in the game. Now let's go to DVN. Okay, another stock that was really strong yesterday. So you want to see something that bucks the trend. This one bucked the trend yesterday. It broke out above a big level here. I don't even know what happened here yesterday, but it was good. So I would say with a little bit of a rest, if this thing could hold above 69 or 69.50, that thing could continue higher. And lastly, McDonald's. McDonald's has been a great vehicle for all investors out there for the last decade. Sometimes it's good for a trader, but it's a little bit choppy. If you look here at McDonald's, you will see that at this particular point, you probably want to be a bit careful, okay? To me, this looks a little bit like a Head & Shoulders top, and I hate to say that about McDonald's, but you have, even though I don't ever eat there, here's the left shoulder, here's the head, and then actually that's uncompliant. Whenever I do a road trip to my camp in Lake Placid on the way home, I probably stop there at one of those places. But anyway, here it is. 98's your level. If you're a macro investor, I think if it breaks this 98, the measured move from 102 down to 98, it's not huge, but that gets you down to this 94, and that probably means that the Dow is somewhat correcting. So just be a little bit careful with McDonald's, right around there. And then gold and silver, real quick, for my last quick hit, slash almost even close it up. You look at GLDs, big move since the Fed spoke. If you guys remember, the day that they came out and just around noon, and Big Ben ignited a nice move through this downtrend. Ever since then, it's been somewhat going sideways. There could be some continuation here. Typically, flag patterns like this continue to the upside. If you're long it, I would say maybe be long versus 166 on the GLD, and if we were to start getting above this 170 area, perhaps it can continue. I am not involved in this trade. I think it's been a bit choppy. We traded a few times in here, but at this point, here's your flag type pattern after a nice move. So above 170, it can continue, and I think silver has a very similar scenario. So to wrap it up, it's been a very profitable, I would say 35 sessions for the bulls, since the December 20th gap and go. It's even been more profitable if you recognize the outside day on October 4th we've talked about many times. So at times, markets can correct. What you want to do is you want to follow the trend, and the trend is your friend. But you just got to know what trend that is you follow, whether it's the accelerated trend, the intermediate, or the longer term. And right now, the accelerated trend is in jeopardy of being breached. If it breaks, traders will probably be trading from a little bit more of a net short position until the market proves where it could hold. We outlined places for you to look with those Fibonacci retracements on the Qs, on the spiders, on the XLF. And then we'll also watch the action in the key stocks to see how they trade and react to what's going on in the world around us, because there's still a lot doing. This has been a solo morning call, but next week starts the new format. It's going to be Brittany on Tuesday, Brittany Umar from the street, Stephanie Link on Wednesday, Joe Malandrino on Thursday, and I believe Chow, who's new to the street, on Monday. So there'll be not just you guys staring at me, because I'm sure it's the last thing you want to do. So there'll be a different perspective. This is just one of those last day things where I'm flying solo. Alex is on her way to Bloomberg, and I wish her luck, and I wish you luck trading today. Have a great day trading.